Good morning, Steve Reed with the morning grain comments. Markets a little bit lower with beans down 3, corn unchanged, and wheat's down 9 cents. And soybean oil is losing to meal. The Dalian futures, soybeans were lower while meal was higher. Palm and soybean oil is sharply lower on concerns about demand and maybe too much supply. As far as the grain markets are concerned, again, trading below 13.50 in November beans. I think that's a reflection of concern about harvest. We need a yield below 49 to offer some support to the soybean market and for some kind of rally. When we look at what the trade is looking for, a 50.1 yield is similar to what the USDA said, looking for crush to be up 100 million bushels from this year, but exports down 200 million bushels. But still, you have a carryout of 218 with a 50 yield. So any yield below 50 makes U.S. soybean outlook tight. Down in South America, it still remains mostly dry, especially Western Argentina, Central and Northern Brazil. But it looks like starting October 1st, we're going to start seeing some monsoon-type rains moving into the central and northern Brazil, maybe drying out southern Brazil. We'll see how much rain western Argentina gets, but northeast Argentina is getting some rain now. As far as the corn market is concerned, again, hovering around that 380, just below the 480, below the 480 level in the December. Again, not enough export demand and concern that the harvest pressure is going to offer resistance to the market versus talk that eventually we could see a little bit better demand number. And the key is the corn yield and whether it drops below the 173.8 that the USDA is using. Again, USDA is talking about a 635 million bushel increase in demand in 23-24, and some doubt that. And still the carryout would be a little over 2.2 billion, which is negative to prices. The interesting thing is the basis to the farmer is considerably wide, and that basis is historically wide. And so will the farmer sell these lower prices, or will he store? Over in the wheat, again, lower prices. Again, the big picture is that funds like being short wheat and not a lot of news to trigger a higher trade. Russia continues to export wheat at lower prices, and U.S. and Europe is trying to find a price, especially in Europe, at which they can increase their exports. Still looking for some kind of Ukraine corridor that they could ship their grain out, and news that Ukraine may be selling China corn may have been a false rumor. So again, choppy trade, beans and corn near support, and wheat below support. This week's a pretty big week for central banks worldwide, with the U.S. Fed and European banks having a meeting to talk about rates.